Hello there, Investaholics and friends. It's been roughly 6 months since I did my first video on the CommSec Pocket app, so I thought I would give a quick update on the 3 ETFs that I chose. Crazy times, but hang around and let's look at the 6-month performance of the 3 best ETFs. G'day there, Valaholics! As you all know, my name is Scott, and my mission here is to give you the tools, the knowledge, and the confidence to take control of your own finances and your own financial freedom. As the saying goes, I want to crack your financial sky. And along the way, I want to have some fun and we want to make some bloody money together. So stick around and I hope you enjoy the coming presentation. Yeah! So I haven't made any changes to this table since the last presentation, so just left in just so you can kind of see what I was working from when I come to my previous conclusions. So hopefully in the next, when I do the following 6 months, so the 12-month update, I'll update this table with the 1920 performance or thereabouts, so give you a bit of an idea of what these ETFs have been doing, so you can go back between presentations and actually monitor what's happening. I think this is probably the most useful part of this whole process. Just to show you guys hypothetically, if I was using this app, what I'd do, how I'd set it up. The 3 main considerations: we want to have diversification, so we don't want to have all our money in the same or similar type of assets. We want to be looking for low fees because high fees reduce our returns, and that means less money in our pockets. And also dividends, because as I said, you want to actually have some money coming back in your pocket, and dividends make up quite a healthy percentage of your overall returns from investments in the stock exchange or in companies in general. So I chose IOZ, which is the iShares S&P ASX 200 fund. That one pays a dividend of 4.8% and also has very low fees of 0.15%. I followed up that one with ETHI. That one picks out the 100 biggest future global sustainability leaders. So that's an internationally focused ETF. And that has some big names, you know, like Apple and a lot of the other tech companies, but also healthcare companies and things like that. So pretty much it covers a good cross-section of all things throughout the industry. I chose that one over I100. I think that one's, you know, thinking about sustainability and international investing. We want to be involved in international, but we also want to be thinking sustainable, something I think a little bit more about these days. Pays a pretty good dividend of 4.24% when I put this slide together. Fees are a little on the high side, but not too bad. It is an international ETF, 0.49% per year. The next one, probably a little bit interesting for most people after looking at the performance slide, but I like IEM, which focuses on the best large mid-cap equities in the top 20 emerging markets. I think over the long term, emerging markets actually do quite well. And if you go back and look at the graph on IEM, so when you're doing your research on these things, you'll always want to go back and have a look at the past performance. But as always, past performance is no guarantee of future performance. But I think having some a portion of your funds invested in emerging markets over the long run will actually bump up your overall returns. So with the 3-stock or ETF portfolio, how would I allocate my funds to it? So if I had say $200 to invest, I would invest $100 in IOZ, so $100 into the Australian market, and because the other 2 ETFs are effectively international, I'd put 50 into ETHI and 50 into IEM, so that gives it a balance, a pretty good balance, I think, anyway. So the way I look at it is, so for every $1 I put into the Australian market, I'd put 50 cents in each of the other two, and that kind of balances out, not too bad. I mean, that's a simplistic way, and that's kind of the way I look at it and the way I'd run this. Keep it simple. Don't want to overcomplicate yourself, so you don't want to be investing in all 7 of these ETFs because your fees start to mount up. So you want to pick what you think are the best. I'd say 2 or 3. That gives you diversification, keep your fees low. Look for dividends, because dividends are a big portion of your return, and also those dividends can actually be reinvested into more shares in the ETF. So that's what we want. You want to be reinvesting your dividends into more shares. I think I published my initial video on the 10th or 11th of October last year, so I thought this would be a great opportunity to give the quick update. The figures are as of the 9th of the 4th, 2020, so this video is coming up a little bit late, but better late than never. So I chose IOZ, ETHI, and IEM. So IOZ, which was the index that tracks the ASX 200, obviously that's down quite a bit, 17%, almost 18%. ETHI, which is the Future Global Sustainability Leaders, hasn't actually performed too badly, mainly because that one I think has stocks like Apple and Amazon and Google and those types of things in it, and they perform quite well. So we're seeing a 11% gain as of the 9th of April. IEM, which is our emerging markets, that hasn't done too badly actually in the circumstances. I would have thought that emerging markets would be down much more, but this one, or the ETF, and the underlying investments seem to be holding up pretty well. You're only looking at roughly a 6% decline. So let's flick through and have a look at some more of the graphs, but yeah, not too bad so far. So let's quickly have a look here at our portfolio performance. So initial investment was $1,200, $600 went into IOZ, $300 went into ETHI, and the remaining $300 went into IEM. So we can see here with the bar graphs, as we sort of looked at before in the previous table, IOZ and IEM are down, but we've got a nice little bump there from the Global Sustainability Leaders ETF, which I'm quite happy with. It's got definitely got some good companies in that one. Definitely an ETF to keep an eye on. So I think we've got a reasonable diversification. So you should see in the next 6 to 12 months, IOZ come back after a lot of the uncertainties come out of the market, and you're going to get, I think, more outperformance from Global Sustainability Leaders as well, because you've got those big international companies making up a lot of that portfolio. Your emerging markets tend to be counter-cyclical, so they go against what the rest of the world's doing. So hopefully, on down years when the IOZ and ETHI are down, you might get some outperformance from IEM, but IEM's definitely a much more riskier one, and that's kind of the outperformance part of it, I suppose. The main reason I chose that one for. But so, in a nutshell, we're only down 12.3% as of the 9th of 4th, 2020. So pretty good in the market situation, in my humble opinion. So definitely keep an eye on it. I'll have obviously in 6 months I'll have another update out. G'day guys, thanks for hanging around. I hope you've gained some great information out of the presentation today. If you have, hit the thumbs up and subscribe. I'm trying to create lots more entertaining and information-packed content. Yeah, I really hope everyone enjoyed the video, and until next time, thanks very much. Ciao.